All right, guys, welcome back to Limitless Profit. I really appreciate you guys checking out this video. Make sure to subscribe and hit the like. All right, turn on notifications. You already know the routine. So I'm going to show you how I got sniper entries up here. 1, 2. Basically, these two entries were before confirmation. Okay, I intended on taking profit down here just as like a tiny scalp. Ended up missing it. And then I got back in a position after I got confirmation up here. So let's get into the video. All right, so here we are on GBP USD, obviously. Okay, I just walked you through where I got in, where I got out. Now I'm going to explain why and why I didn't take full profit down here. Okay, so this is a 5-minute time frame. First, what I'm going to do is prove you guys this is live. I'm going to turn off my trades. Boom. You have timer up here in the corner. We are watching live markets. These wicks are going to be going. I'm going to turn my trades back on. Boom. These are live trades. The trades I've showed you guys previously were these here. Boom. 2 sell positions, a small take profit here. Got a buy here, a take profit there. I got a buy here, a take profit at the top. You notice how this is pretty low, this is pretty high. This is pretty low. I could have done better there. I think I was just trying to get out of position there. And then this was a scale in to finally close in profit because I wasn't going to stay awake for this trade. I did massive $3,400 scalping video, was back in here, and then previously. And then this right here was my rest day. This was Monday. I didn't trade Monday. I just took those positions to the top here on Sunday, a little bit of a ride down, and then Monday I took off, and now we're back Tuesday, okay? There's no sense in over trading. Tire yourself out. Take a day off every once in a while. Preferably pick the non-busy days to take off, and yeah, you'll feel a lot better definitely. So I'm going to turn these trades off. Boom, boom. Okay, we're going to back out to a 4-hour time frame. Do it every time. Every chart's different. All right, you may know. Clearly, we're in an uptrend. Hey, but why was I taking sell positions if we're clearly in an uptrend? Okay, all these little tiny pullbacks, I mean, that's money. That's money. That's money. Okay, how do I gain sniper entry on them? Let's go to a 30-minute. Okay, so we were somewhere in this area over here. Let's see, today is the 27th in the bottom right-hand corner, so the 26th was right in here. I took these trades, was it last night? Yeah, it was last night during the day. Or not during the day, but yeah. Okay, so it's from here back. Actually, we're going to go right here. Okay, we'll just zoom this whole thing in. Okay, so I mean, it's hard to, I can't clip anything out for you guys. It's not my intent. It's just hard to check these charts out. I mean, this is December 21st back here. It's hard for me to explain. I'm trying to give you guys the best explanation, okay? So this impulse buy or this expansion, this move to the upside with trend, whatever you guys want to call it, this push up, okay, had just happened. As you can see, my cursor down at the bottom, 6 a.m. on the 25th, okay? So this move had already happened. 9 a.m. on the 25th, you get it, okay? So we're going to go here because this is our high. I'm going to mark it for you guys. This is our high as we open up the charts right in here. You know what I'm saying? So that's our high, and then as we open the charts in here, this low had already been made, okay? But technically, no, that's the low that's already been made. That's what we're playing within. Boom, right there. Okay, so we're going to zoom that in. So this is our high, and this was our low as we opened up the charts within the just recent move, with the recent action that we had going on. So now I'm going to zoom that into a 5-minute. Okay, so this was our high, and this was our low. So this right here, let's see, I took the trades about Tuesday, 27th, probably around like 1700, I'd say. Well, let's just go here to the peak. It peaked it, for London right at midnight. So we'll just go to the peak, okay? It's irrelevant. You'll see why. So first thing I'm going to do, I don't mark my high and low like this. I just throw a Fibonacci on there. So we go to Fibonacci retracement, okay? We do it off the 5-minute time frame. I'll just pick, maybe the wick, maybe the cluster of candles. I finesse it as I go, and you'll see why. So this looks pretty good. You can see if I condense it a little bit, you can see, oh my goodness, not super close. You can see these levels. Boom, it's bouncing off that level. Boom, it's bouncing off that level. It's retesting this level. It's retesting that level. So I try to get, this had already all happened. Okay. This was the move that we're highlighting essentially. This is the move that had just occurred. But we want to get these Fibonacci levels, obviously it's not way up there. We want to get these Fibonacci levels kind of sitting pretty, like they sit however they sit. I realize that, but boom, there we go. We're going to call that good. Okay. We have a little test here, a test kind of there, a test up in here, down, test, boom, we tested it here. Okay. So this is the move that had already happened. The optimum place to get in is on your 100 line, your 100%, which is your top to bottom, or your 0 line. Okay, those are the optimum places to get because it was your previous swing high and swing low. Okay, everything in the middle, like let's say you took a trade right here on the 23.6, you're taking a trade for retracement. I mean, that's 100% fine, but you need to realize that you're only capturing, see, like if you had captured up here, boom, you're taking, what is that, 72.6%, or 72.4% of this entire high to low. So basically your chances of success are better at 0 or 100%. Let's just put it that way, because that's your previous swing high and swing low. It's either going to break out of it or it's going to reject it. Okay, so as we rolled, this was the move during the day. This was Tuesday at midnight. Okay, I took those trades Sunday and Monday right in here on this downtrend right here. Boom. Okay, and then we bounced here. I took this day off. Okay, and then I got in after work sometime right in here around 1900. Okay, so this is the impulse move we're looking at. So we're going to zoom that in even more. Okay, we already have our high, we have our low. So the optimum place, I'm thinking, we're either going to break out of this thing or we're going to retest the 100 line and we're going to come down here to the downside and start retesting our Fibonacci levels. Okay, so look at my MACD. We had this high push up here. Okay, pushes up, kind of comes down, makes a little bull flag, pushes up again, and now we got some divergence going on up here. Boom, boom, boom. A big drop down, but price is still climbing. Okay, there's more divergence right there. So you got divergence here. All this is divergence. This looks as pretty clean right here. This looks pretty clean, and then all this is pretty clean. Okay, so it's you start to see the divergence coming in right here. Okay, so which is why I'm going to turn my trades back on. We're going to highlight just the trades I took that I'm trying to explain to you guys. We'll even cut it down to there. Okay, the 0 line is still there and the 100 line is still there. Okay, I started to see this divergence coming in, and I got in just above the 100 line. Why did I get in above the 100 line? Because of the divergence, basically. I didn't think it was going to be a breakout. A lot of people, they call it different things. They call it, people, market makers expecting rejection off of this 100 line. So market makers will run the price up here so everyone gets stopped out, because obviously everyone has their stops up here, right? They call that, like market makers targeting their stop loss and all that other stuff, But possibly it could have been everyone thought it was going to break out. You had this massive impulse, all this momentum coming up. The EMAs right here never crossed each other. It's just a massive push, and you thought maybe it's going to pick up some momentum right here, hitting this resistance, and then it's going to bust through. Okay, I was thinking the exact opposite. Okay, we saw this divergence coming in right here. Now what I'm going to do is, I couldn't get a clean picture on the divergence, so I'm going to go to the most popular time frames to see if there's any other divergence. Okay, so let's go. This was the impulse move right here. Right here, this is what I was looking at, obviously, when I took these very first two trades. And what do we have? This is the big impulse move from zero here, and then our divergence on the 15-minute is in the red. And we had divergence on the 5-minute, or sorry, not divergence. Our MACD is red right through here. So our MACD is going down, which means we're losing momentum, but yet our price is still climbing. Okay, that's another divergence signal. Except this time we're getting on the 5-minute or the 15-minute. So we already had divergence on the 5-minute. We're getting divergence on the 15-minute. I'm going to go ahead and jump in here just above the 100% mark, which is the last highest high, thinking to myself, market makers are hunting, for stop losses, or, everyone thinks it's going to be a breakout, etc. There's several reasons why it's up there, but I trust that it's going to come back down because I think it's just a fluke. So now I go to the 30-minute. I'm seeing divergence on all those, okay? So this is the move that I saw. God, the MACD looks so ugly when you zoom it in so close. Okay, so this is the move we're looking at right here, these last 5 trades, okay? So now that I'm on the 30-minute, I see from the 0 line to the 100 line, we got divergence right here. MACD coming down, price is still going up. We have a dip, MACD still going down, price pushes up again, and then price continues to follow the momentum, or the MACD, the momentum indicator, whatever that is, the MACD, okay? Now, why did I take profit where I took profit? So basically that was my sniper entry, okay? Now, why did I take profit? You can see I hit this one right off the very top, and then these ones are pretty close to the top. Your target is the 100th percentile, which was my previous swing high. That's my target. Or you're going off your 0 line where you're going to get rejection or a bounce or a breakthrough. The 0 line and the 100 line, I'll make another video on this too. There's so much content I got for you guys. Make sure to subscribe because, my EMAs I'm using, everything's a little bit different than what everyone's doing. Clearly, the way I'm looking at this, people are thinking breakout, obviously. We pushed up higher, we dipped down, we're going to build up some momentum, guys, and we're going to bust through. And we did, but it didn't hold. And then we came right back down, retested our 0 line, came crashing down. Kind of made a lower high here, and then pushed down even further, okay? So, why did I take, I'm going to go back into a 5-minute time frame because, once again, it all looks so messed up, okay? Right here, I took profit for, what is that, half a lot, okay, a 0.5. This is 50,000 units for those that trade units, or it's a 0.5 lot for those that trade, like MT4, I guess. So I took it here because we're approaching 1 a.m. Do you see I did it like perfectly right at 1 a.m. and I need equity. With TD Ameritrade, I need equity to roll over at 1 a.m. They start giving you margin calls and they start taking out your stop losses, or not stop losses, but if you're in the negative at all, more than what your account size is at 1 a.m., then they start closing positions for you, okay? I wasn't 100% sure that we wouldn't come back up here and double top. So I just wanted a little equity as a little cushion to make sure they didn't hit me with a margin call. And as you can see, they may have right here at these little tops, I don't know, exact price I got out. I don't know exactly how much equity I had, but I like to keep, obviously thousands in there of equity just in case you get a little push. It depends on the lot size you're using and everything, and people can say, oh, you're over leveraging. No, actually I'm not. I knew my exact target. I knew that we would get a little bit of a push, and if we ended up getting continuation, you simply close the trade. All right. But this right here is exactly why I don't do a stop loss. If, let's say I had put a stop loss, okay, we hit 37.58, but my swing high was 37.40, so that's 18 pips. So let's say in your mind you're thinking, okay, here's our previous swing high. I'm going to go 10 pips higher. Okay, well, they still hit your stop loss by 8 pips, and then what happened after they hit your stop loss? It came crashing back down. And so now you're upset because your stop loss got hit, and then the price went the direction you thought it was going to go. So there's my explanation on my stop loss theory. And no, if I think I was in the red right here, maybe $300. Like I'm using $30,000. 3,000 or sorry, $300 is not going to affect my account at 30,000. Okay, that was my max that I was in the red right here. It's 100% fine me taking a 3-4 lot size as long as you understand, you know, where your get out is. Your mental get out is right up here. Now, when we pushed up here, so when I got into these 3 lots right here down to here, I was up $700. Okay, and I thought about it. I closed my fund. I'm like, nice, 700. We're going to continue. However, this little tiny lower high, that's nothing. Okay, all the big players, they trade off of higher time frames. You can get in for scalps and stuff off the 5-minute, or you can get laser entries off the 5-minute, but everyone's trading off of higher time frames. So let's go to let's say a 15, the very next, you know, highest time frame. Oh, that's not our move. Our move is right here. So let's say right here, boom. You're looking at the 15, you have a higher high, okay, a little baby lower high, no big deal. You're still above your EMA, you're still right here, and then you make a higher high here, okay? You got a little baby lower high, little baby lower high. You're looking for a double top. You're looking for a lower high, a significant lower high. You're looking for an engulfing candle. You're looking for signs of a reversal. And I got to thinking to myself right here, you know, I wasn't looking for reversal patterns, okay? I just basically knew, okay, I'm not going to say I knew. I highly anticipated that it was highly likely that the top was going to be somewhere in this area right here and not far past it. Okay, that was my guesstimation. Okay, flip a coin. I was right, I was wrong. I don't know. You know, I've been right more than I've been wrong. So that was my guess. And yeah, so I would just put my stop loss obviously just above it. If I'm hitting it heavy with a heavy position and I have good, you know, good sense that it's coming down, then yeah. But anyway, long story short, right here I was about $700 in profit, and I thought to myself I should probably take it. I didn't realize all these things looking at it, speaking to you guys. You know, here we're getting a EMA bounce right here. This is the 55 exponential. Okay, we're bouncing right off the 55. We haven't broken the 55. Like, man, maybe I should hop in there and take profit. And then, you know, as I'm sitting here thinking about it, what, about an hour had passed, and then boom, it shoots up. And now I'm at pretty much break even. So I just went from 700 in the positive to break even. And I'm like, well, hell, now I think I'm at the top. So it makes no sense to get out now because you're already at the top. Okay. My thought was to get out and then get back in further up here. But, you know, that wasn't part of my strategy. That wasn't part of my plan. I was going to buy it at the top and hold it to either the 78.6, the 61.8, the 50, or the 38.2. And that's basically what I intended to do. And that's what I was going to hold to it. So I went from negative 700 in profit, or sorry, 700 in profit to negative 300 in profit up here. And I'm thinking, dang, man, was I greedy? Was I experiencing greed right there? No. And this is the trading psychology. I had a plan, okay? My plan was not to be greedy and take a $700 scalp. My plan was to hit these main levels or hit my stop loss. And that's all I'm going to do. I'm not going to look at a dollar figure and say, oh, nice, you know. I could have looked at this EMA and said, you know what? Ooh, we might bounce off of that. I'm going to get out here, and if we break the EMA, I'll get back in on a retest of the EMA. You know, something like that is 100%, you know, plausible. It's reasonable. You know, I could understand that. I could back that idea. But getting out just because you're $700 in the positive and you don't want to be greedy, I'm thinking, well, that wasn't my plan. Why am I going to do that? So I didn't do that. And then up here, obviously your emotions are kicking in and you're like, dang, it just went $1,000. I could have locked in 700, but now I'm 300 in the negative. So now that's $1,000 swing. I'm an idiot. Why am I greedy? Why did I not take that? You know, but you got to remind yourself that wasn't the trading plan. Okay. You're going to hit your stop loss or you're going to take your profit. Okay. I didn't even want to take profit here, and I'll tell you guys exactly why I did. Okay. Anyway, here we go. I got in, what is this, 1 a.m. I got my little bit of liquidity for cushion. That way I could go to sleep because I had to work the next day. Okay. 1 a.m. rolls around just before 1 a.m., you know, like 11:59, and I get a little cushion for liquidity in case we get another major push up. I was already in profit down here because I mean I took this trade up here, but I wanted a little bit of cushion in case we came up here, did a triple top, you know, double top, something. Okay. Luckily we got our lower high here, and then we had the EMA cross, and we started dropping. But let's go to the 5-minute. Okay. Now, these are the trades. I got in right here for the liquidity. I got out right here at, let's get, what is that, 4:20 in the morning, okay? And basically, the only reason I got out right there is because I had to wake up and go to work right about here, okay? And I wasn't sure which one of these levels it was going to hit. It could have hit the 61.8. It could have hit the 50. It could have came all the way down here to the, you know, I wasn't checking my charts for divergence. I wasn't looking for lower highs. I wasn't looking for any indication of that we've hit the bottom. Okay. All I was thinking was, oh man, I'm so tired. Like, it's 4:20 in the morning. I got to get up for work. I'm $1,440 in the profit at this point. You guys can, you know, add up these entries. In this entry, a little half lot sell there, and then a 3.5 lot sell there. And you're going to come up with, I was $1,440 in profit. And I thought, man, we're so close to the 61.8. I could stay awake and hit it, but then look, how many hours did that pass? It went from 4:40, and then we finally hit it at 5:30. So it would have taken me another hour and 10 minutes to hit the 61.8. And I just was not willing to stay up. And so I just took profit. You know, that's where, you know, you lock in the profit and you're green until you take another trade. You know what I mean? So I wasn't mad about that. That's the reason I took profit right there. And I definitely think that we're going to get, you know, I haven't analyzed this chart very much. I mean, we're kind of double bottoming right here. Like I said, we're on smaller time frames, okay? Big high rollers don't trade off smaller time frames. That's just how it is. Big players. I mean, this is arguably a double bottom. You go to, let's say, a 1 hour, it's probably going to look like a double bottom. Is it? Nah, you can, it's arguable. I mean, the wick hit here, but yet this wick went past, but yet it never closed past. So do you call that a double bottom? You know, it all depends on how different eyes look at it. But long story short, we're hitting the 38.2. A lot of people take that as a reversal and they start going up. Meanwhile, you got an EMA cross. You know, you don't know how other people are trading, but long story short, let's stay with what we're doing. That's how I got in at the very top, my 100 line. Okay, my 100 line. This is your 100 line, your last swing high. Okay, the 0 line is your last swing low. Those are the two main spots you want to get in for either a breakout or a retracement. Okay, I will admit I did get in, not at any of those spots on Sunday. That's because Sunday's market open, and as you can see, we had just bounced off of the 23. We're on our ascent up to the top. We had got rejection off the 30 or the 61. Okay, we retested the 50 multiple times, and then that was my signal, and we pushed up. Not to mention there was probably some, you know, momentum on a MACD or something going on right here. I don't know. I'm not going to go through that trade with you guys again. But long story short, that is why I took that trade. Now this trade here, God, that would have been beautiful. This trade right here, you know, even if I had kept my sell positions, because I was in a sell right here, you see it. But what time was that? I took profit at 7:10. Okay, 19:10. That's 7:10 my time. And then I hung out with my kids, and then I went to bed. I don't trade 24/7. I just now pulled like a $3,465 trade in a couple hours. Okay, it wasn't just GBP USD. I only showed you guys those trades, but it was all the ones off my FTMO video are the same ones I took on my regular brokerage account. So yeah, if my FTMO account's showing a profit, then my regular broker's showing a profit too. I'm not going to give everybody my 30%, you know, just for equity. You know, that makes zero sense, but I'll get into that in another video. But anyway, all my hard work paying other people. No gracias. So yeah, anyway, GBP USD, it does actually look like we have some divergence going on here. We had a bounce off the 50. We have a bounce going here off the 38.2 divergence, higher low, lower low. The power of divergence, I'm telling you, and we're pushing up. So boom, higher low, lower low. They're going towards each other, which is a divergence. You know, we could bounce right here. It was a small level of divergence from the 38.2 to the 50. That right there is 15 pips. You could have caught an easy 15 pips right there. Boom to boom. Not only that, you're bouncing off your 55 EMA. You know, 15 pips. That'll pay the bills. You know, quick little scalp right there. Not to mention that you blew past the 50 a little bit. You could have got even a better entry. Boom, that's 22 pips right there as it sits. 25 pips if you want to count, you know, how high it pushed up a little bit. Just off of these key levels, okay? You put your swing high, you put your swing low, and then these Fibonacci levels are your key levels. Look at here. From our zero line, we pushed up, we had a bull flag right here off the 38.2. And then we had a push up, we retested the 61.8, and then we pushed up, we hit our 100 line, and then we got rejection. Right there would have been your take profit, you know? You could have taken profit so many places. You could have taken profit right here, and then you blew through it, and then you retest it, then you got back in right here. You would have missed a couple pips in there, but, you know, if you're scalping, it happens. So, as you can see, we're pushing through the 55. I definitely think GBP is going to be pushing up, but yeah, we're not here to talk about that. Anyway, I really appreciate you guys checking out this video. I hope that you can implement this into your trading. I even gave you a little bit of my psychology right here when we broke through our swing high, okay? Just because you get a little, and then let's see how that looks on higher time frames also, okay? Just because you're getting a, you know, looks like you did have a couple closures. How does it look on a 1 hour? Okay, you had a rejection here, so you did wick past it. You had rejection with an, not quite an engulfing candle, but a good red candle. Okay, you had a wick right here. That's a gravestone doji. Make sure you learn your candles. Okay, that's a gravestone doji rejection. So we got rejected once, rejected twice. We have a doji right here. We have a green candle, boom. And then immediately on the 1 hour, we have a red engulfing candle, boom. Okay, we break our EMA to the downside. Now we have an EMA cross. Long story short, learn your candle patterns. Check for divergence. You need multiple confluences. And yeah, 100 line, 0 line, key levels. Really appreciate you guys checking out this video. Make sure to like. I will try not to ramble so much, and I will break things down more clearly in future videos. It's really hard. I have no topics. I'm just giving you guys a little insight. This is another 30-minute video. I already made like a 30-minute video earlier this week. You guys are just getting gold into the mind of Limitless Profit. So anyway, really appreciate you guys checking out this video. Make sure to subscribe. And until next time, I really hope all of you have Limitless Profit.